It begins with an alarming announcement. China, which controls the vast majority of global rare earth production, declares that it will no longer export any rare earth elements to the United States. Rare earth elements, essential for everything from smartphones, electric vehicles, and advanced electronics to wind turbines, defense systems, and aerospace technology, are suddenly unavailable to American industries. Markets react instantly, and the ramifications spread rapidly across the economy, corporations, and financial systems. The first effects are felt in high-tech manufacturing. Companies reliant on rare earth elements for semiconductors, batteries, magnets, and electronic components face immediate shortages. Production delays occur as firms scramble to find alternative sources which are scarce, costly, or technologically inadequate. Stock valuations for technology companies such as Apple, Tesla, and Intel drop sharply as investors anticipate slower product development, supply chain disruption, and reduced profitability. The defense industry faces critical challenges. Rare earth elements are vital for missile guidance systems, stealth technology, satellites, and other military applications. Contractors such as Lockheed Martin, Northrop Grumman, and Raytheon experience operational uncertainty as the availability of materials needed for defense projects becomes constrained. Government procurement schedules are delayed, project costs surge, and stock prices adjust to reflect both strategic risk and operational disruption. Energy and renewable technology sectors feel immediate strain. Electric vehicle manufacturers, wind turbine producers, and energy storage companies rely heavily on rare earth materials for magnets, batteries, and other components. Production slows, costs rise, and market adoption of clean energy technologies is delayed. Companies like Tesla, General Motors, and utility-scale renewable energy firms see their stock valuations fluctuate as market confidence adjusts. The broader U.S. manufacturing sector experiences cascading effects. Electronics, automotive, aerospace, and medical device companies all rely on rare earth elements and critical components. Supply shortages force companies to halt production, adjust timelines, or source alternative, more expensive materials. Operational costs increase, profit margins shrink, and stock market valuations across these sectors are pressured downward. Financial markets react violently. Investors anticipate a prolonged disruption in both high-tech and industrial sectors. Indices such as the NASDAQ and S&P 500 experience immediate volatility as analysts recalibrate earnings forecasts. Hedge funds and institutional investors rebalance portfolios, shifting assets toward defensive stocks, treasury bonds, and commodities like gold. Market uncertainty increases global investor anxiety. Global supply chains experience dramatic reconfiguration. U.S. firms scramble to source rare earth elements from alternative suppliers, including Australia, India, and Africa. However, production capacity outside China is limited, costly, and cannot immediately meet U.S. demand. Long lead times, geopolitical complications, and logistical challenges exacerbate the disruption, increasing costs across multiple industries. Automotive manufacturers experience severe impact. Electric vehicles, hybrid models, and even some internal combustion engine components rely on rare earth materials for batteries, magnets, and electronic control systems. Companies like Ford, GM, and Tesla are forced to delay production, reduce output, or absorb higher component costs. Stock valuations adjust downward as market analysts project slower revenue growth. Consumer electronics are disrupted. Smartphones, laptops, tablets, gaming consoles, and other devices dependent on rare earth elements face supply constraints. Companies like Apple, Dell, and Microsoft experience production delays, inventory shortages, and rising component costs. Retailers struggle to maintain availability, driving prices higher and reducing sales volume. Investor confidence is shaken, reflecting in stock market corrections. Defense contractors implement emergency mitigation strategies. Alternative sourcing, recycling programs, and strategic reserves are deployed to maintain operational continuity. However, costs for sourcing, logistics, and accelerated R&D surge, reducing profit margins. Stock valuations reflect uncertainty about long-term sustainability of defense production. Renewable energy adoption slows. Wind turbines, electric motors, and solar panel technology face material shortages, delaying domestic and international projects. Companies in the renewable sector experience project delays, cost overruns, and reduced profitability. Investor sentiment in the clean energy sector turns cautious, leading to stock market fluctuations. Small and medium-sized enterprises reliant on rare earths face existential threats. Specialized component manufacturers, electronics assemblers, and niche technology firms experience supply shortages, rising costs, and delayed deliveries. Many are forced to scale down operations or close entirely, contributing to unemployment and regional economic contraction. Corporate debt levels increase. Firms investing heavily in sourcing alternatives, stockpiling, or recycling initiatives take on additional debt to maintain operations. Rising interest rates and uncertain revenue projections amplify financial risk. Credit rating agencies reassess corporate risk, influencing borrowing costs and market confidence. Global trade patterns adjust rapidly. China's dominance in rare earths creates leverage over international trade, while U.S. dependence on alternative suppliers triggers geopolitical negotiations. Australia, India, and other countries expand rare earth production, but scaling is slow and costly. International investors monitor supply chain realignments, adjusting portfolio strategies and capital allocation. Healthcare and medical technology sectors are indirectly impacted. MRI machines, medical imaging equipment, pacemakers, and diagnostic tools rely on rare earth elements. Hospitals and medical device companies experience delayed product availability and higher costs. Stock valuations in healthcare technology reflect operational and financial uncertainty. Corporate strategy pivots toward resilience. Firms invest in domestic mining initiatives, recycling programs, and supply chain diversification. Long-term R&D is directed toward rare earth alternatives and material efficiency. Operational costs rise sharply, profit margins are pressured, and stock market volatility reflects ongoing uncertainty. Employment patterns shift. Workers in manufacturing, mining, and technology sectors face layoffs, temporary furloughs, or slower hiring due to supply shortages and operational adjustments. Workforce retraining programs are initiated, but labor market disruptions persist. Consumer confidence declines as economic uncertainty spreads. Consumer prices rise. Electronics, automotive products, and renewable energy solutions become more expensive due to supply shortages and increased production costs. Inflationary pressure spreads across the economy, reducing purchasing power and discretionary spending. Stock markets reflect these macroeconomic concerns. Venture capital and startup ecosystems face challenges. Companies developing consumer electronics, clean energy solutions, and innovative technologies reliant on rare earth elements experience delays or cost overruns. Investment becomes more cautious, slowing innovation and reducing employment opportunities in technology-intensive sectors. Defense procurement experiences cascading effects. U.S. military projects dependent on rare earth components face delays, budget increases, and operational uncertainty. Contractors adjust production schedules and prioritize critical projects. Investor confidence in defense stocks fluctuates as analysts weigh both risk and potential government intervention. Energy infrastructure projects are delayed. Wind farms, electric vehicle charging networks, and battery storage initiatives face slowed implementation due to material shortages. Companies experience reduced revenue growth, project cost escalation, and strategic reevaluation. Stock market valuations for renewable energy and energy storage firms reflect increased risk. Global investor confidence in U.S. technology and manufacturing declines. Companies unable to secure rare earth supplies face revenue disruption and profitability challenges. International capital reallocates towards stable supply chains in other regions, reducing investment in U.S.-based tech and manufacturing sectors. Corporate innovation pipelines are stressed. R&D programs in AI, robotics, consumer electronics, and aerospace face material constraints. Companies accelerate alternative material research, but scaling new solutions is costly and time-consuming. Delays in product launches affect market competitiveness and stock market projections. Small towns dependent on manufacturing and technology face local economic contraction. Layoffs, delayed projects, and reduced spending impact local businesses, services, and tax revenue. Regional economic disparities intensify, influencing social stability and local financial markets. Defense and aerospace firms continue to face operational uncertainty. Satellites, aircraft, and advanced military systems reliant on rare earths encounter production delays. Contracts are renegotiated, and government oversight increases, creating additional compliance costs. Stock valuations for these companies fluctuate in response to uncertainty. Consumer sentiment deteriorates. Rising prices, reduced product availability, and delayed technology adoption influence purchasing behavior. Retailers experience declining sales volumes, delaying expansions and marketing initiatives. Stock markets respond to changes in consumer confidence and spending patterns. Corporate debt exposure increases. Companies stockpiling rare earths or investing in alternative sourcing incur higher leverage. Risk-adjusted borrowing costs rise while bond markets experience volatility. Firms unable to adapt face insolvency risk, contributing to economic uncertainty and reduced stock valuations. Global economic ripple effects are profound. U.S. dependence on Chinese rare earths underscores vulnerabilities in high-tech supply chains. Emerging markets expand production to fill the gap, but logistical and geopolitical challenges persist. Stock markets worldwide adjust to shifts in trade, investment, and industrial production. Corporate restructuring accelerates. Firms invest in domestic production, recycling, alternative materials, and supply chain diversification. Costs rise, profitability is squeezed, and stock prices reflect uncertainty. Companies unable to adapt face market share decline, layoffs, and potential bankruptcy. Defense, energy, and industrial sectors adjust procurement strategies. Supply shortages and cost increases create delays in project execution. Investors weigh operational risks against strategic importance, leading to fluctuating stock valuations. Innovation pipelines in consumer technology and clean energy slow. Companies reliant on rare earths for critical components face production delays, delayed launches, and increased R&D costs. Startups experience funding challenges, limiting growth and employment. Stock valuations adjust to reflect reduced innovation output. Consumer markets gradually adapt. Domestic alternatives, recycling initiatives, and imports from new suppliers partially fill gaps, but costs remain elevated. E-commerce platforms diversify sourcing, and operational efficiency improves over time. Stock indices stabilize gradually, reflecting adaptation rather than rapid growth. The scenario illustrates how dependency on a single source for critical materials can destabilize entire sectors of the economy. Stock markets, corporate operations, consumer behavior, and global trade are all affected by the sudden restriction of rare earth exports. Recovery requires strategic investment, domestic capability expansion, and innovation in alternative materials. Ultimately, U.S. industries face a long-term challenge. Reduce dependence on foreign rare earths, develop recycling and substitution technologies, and secure supply chains to maintain competitiveness. Failure to adapt results in prolonged stock market volatility, reduced technological leadership, and economic disruption across multiple sectors. This scenario underscores the fragile balance of global trade, technological reliance, and economic stability. A single strategic action, China halting rare earth exports, creates cascading effects across industries, financial markets, employment, and consumer markets, demonstrating the critical importance of supply chain diversification, innovation, and strategic planning.